This is the riskiest play I've sold a put on to date, and I'm going to show you exactly why I did it. And if you comment down below, you're going to get a special ebook called The Weekly Wheel, which shows you how to run the wheel strategy, not on a monthly basis, but on a weekly basis. So if you want that full ebook, just drop a comment down below in today's video, hit that like button and that subscribe button. But guys, today we're inside the public portfolio because I just took one of the riskiest plays I have done to date. I'm going to walk you through exactly what my thought process was yesterday when I took these trades. I think this is going to be really, really, really beneficial for you. And of course, you can go see my broker statements at onlypeterpru.com or optionsellerschool.com. So let's talk about it. I want to kind of make this all full circle. Yesterday, I shot a video. I was talking about my American Airlines puts that I had expiring on Friday. I was thinking about rolling it. And as I kind of started talking and as I started seeing that, UAL, United Airlines, has earnings coming up yesterday after close, I don't know. I always talk about the gut indicator, guys. That's my number one indicator. Something told me, Pete, look, you purposely gave yourself a really good ROI on collateral for your American Airlines puts, right? Why did you do that? Well, you did that, Pete, so you can close out early, right? 2 days early isn't even that early, to be honest with you. We close it out a little bit early, free up that collateral, and get moving somewhere else, right? So why aren't you doing it right now, right? Because it's not at all the, 80, 90%. And something just told me, Pete, American Airlines on a tear right now. UAL is on a tear right now. Get out. Get out of it and get into another setup, which you're seeing is already really solid for you. And I'm so glad I did. Listen, I know there's no technical or reasoning for the gut indicator, but my mind immediately went to seeing and being in the markets for as long as I have been. I was like, UAL ain't going to have a good earnings. I feel like airlines never have good earnings to begin with. And what do you know? They didn't have a great earnings. And we're seeing today now a large pullback. United Airlines is down 2%. And what do you know? American Airlines is down just about 3% to over 2.5% today, when both were flying high yesterday pre-earnings. Call it the gut indicator strikes again. So what did I do? First thing I did going over to our trade log was I closed out my cash secured put on American Airlines. Now, it cost me a little $10 to close that out. However, I still netted my 2.53% ROI on collateral. Listen, that's already insanely good to get a 2.53% in under a 30-day period. I think it was 28 days, 29 days to get a 2.53% on my money. I am beyond happy with that. And if you want this full trade log plus a bunch of other awesome bonuses, click that first link in the description of today's video. But with that said, right, we got our 2.53% locked in. Now I get that $1,200 back. Where are we going? Where are we going? Where do you think we're going? We're taking the riskiest play we have taken to date on the public portfolio, right? And that is with Kenvue, okay? Now, obviously, a lot of news, a lot of, getting wrapped up in a whole bunch of stuff right now with Kenvue. We're not going to necessarily get into that. But with that said, what did I end up doing? Well, I ended up doing the 15 puts or 15.5 puts on Kenvue, okay? So I sold a put saying on November 14th, right, just that under 30-day mark, I'm willing to buy Kenvue if it's trading at $15.50 a share if it drops that. Now, why did I pick that strike price? Well, let's head over real quick to the charts right here. And I do believe that Kenvue, right, we did see it get close to the 1550s, but it really stayed above 1550 for the most part. Now, that doesn't mean that it's not going to go to 1550. Nobody knows. But looking at the chart, I really don't mind owning Kenvue at 1550. Consider it hasn't closed at that since all of this has happened. I think that news is already out there, and we've kind of, I don't want to say we've seen the bottom, because I do think Kenvue has a long journey ahead of it, but to me, my gut tells me at least for the next month we have seen the bottom, and if not, I have no problem owning Kenvue at 1550. Okay, so I just saw, hey, okay, we see some support there. We're at like this 16ish level. We're between the middle Bollinger Band and the bottom Bollinger Band. So yesterday we were a little bit lower. When I opened this, we were trading around like 16, 13, definitely closer to 16 where we are today, because we had a green. We've ended at the green yesterday as well. So it's not necessarily an ideal setup. We're not like perfectly at the bottom Bollinger Band area right here, but we are still in oversold territory, which is honestly very important to me. As long as I'm in an oversold territory, like in the 30s, obviously I'd rather it be a little bit lower, and it was a little bit. I think it was we were at like high 37s or 37 yesterday when I did my put on Kenvue here, but overall still oversold. I'm looking at my moving averages, my 300-day moving averages, 21, 2179, 2141 respectively, right? And trading at a decent rate. Also great dividend payer, right? You guys already know I love dividend paying stocks for running the Ark Options Strategy on, right? That way when I do get assigned, I can run those weeklies or monthly covered calls. Weeklies are looking real nice also. And you can get that free ebook, The Weekly Wheel. If you want to learn more about how to run the wheel strategy on a weekly basis, drop that comment down below. No strings attached, no opt-in. It's yours for free. It's literally a Google Doc. But with that said, right, for me, I'm looking at these key moving averages. I has a great dividend, no problem with assignment. Perfect. Now, I was going into Kenvue anyway, okay? I was going into Kenvue anyway, but I didn't realize the juice that was going to be squeezed from this one, okay? So when I went into it, right, I was like, okay, let's see the 15.5s. The delta's fine. Like at this point, I don't even care about the delta, to be honest with you, because it doesn't, this one, you'll see, it just doesn't make any freaking sense, right? So what did I do? I sold the 1550s, right? And I collected 74.33 of premium. Obviously, results vary, not financial advice. Your numbers will look completely different when you open it, but you could see this is my trade line. Added that in yesterday when I did that trade, expiring just under 30 days, collected $74.33 of premium and locked up just over $1,500 on that play for a whopping, ridiculous, high risk, high reward 4.8% return. Okay, let's kind of like come back down to reality here a little bit. Why did I do this trade? Well, number one, obviously I want to, grow this portfolio fairly quickly so that make it a little bit more entertaining. And I hope you guys are liking that. You can support this channel, right? And let me know that you're liking this stuff and you want to see stuff like this by liking, commenting, engaging with the videos, right? Doing all of those things, right? But with that said, I now have cushion here, right? What does that cushion mean? Well, guess what? Let's say today or tomorrow, right, or even early next week, Kenvue continues to kind of work its way back towards, the middle Bollinger Band area, right? Hasn't been there in quite some time yet, but it looks like we may start working our way back towards that 17 level. Well, guess what? I have a lot of wiggle room to close out my position early, right? Because again, my North Star is ROI on collateral. So if I even close this out, let's say for like $20, I can buy to close and I'm still hitting my ROI on collateral goal. I can go, let's go 30. I can still, right? I can close this out for $30. Let's see, can we do like 35, right? 35. That's basically where I'm going to be at, that I can buy to close this position out and still hit my ROI on collateral goal, right, for the month. Now, if Kenvue continues to go, we could take a look real quick, right, where we're at with Kenvue already, because we are a little bit green. No, we're still obviously still down on the puts, but that's all fine. That's just the way selling options works. But I have a lot of this cushion now, right? I have a lot of this cushion to be able to buy to close my position out, still make out very, very well from a premium and ROI on collateral perspective. And that's how I think through my trades, especially when I'm doing these more high risks ones, right? Because when I'm doing a high risk play like this, or even like the AAL one was definitely risky, right? Like I'm going to try to get out at the soonest chance I can get. Right, that's just what I'm going to do. I'm going to try to get out as soon as the opportunity presents itself, as long as I have that cushion to be able to get out of it. Now, a lot of people, that especially in our like private community stuff, they're busy people. Like we're not necessarily in the day to day. You can do buy to close till canceled orders. So basically, I could just go out there and say, hey, you know what? If I can close this out for 35, just do it, right? That's fine. But usually what I recommend is I would say stick to not the super high risky stuff. If you're like a busy person, like stick to doing like a SPY weekly wheel, do like way more blue chip companies. Like these risky bets, I would say I would lump into the category of like people taking it a way more seriously, meaning that, hey, they're on their computers and they're able to, they have a little bit more experience. They know how to close out their positions early. They know what to look for, right? And they maybe you've been doing this for like a year or two. But I definitely want to say, just if you are a beginner, and I know there's a lot of beginners that tune in here to the channel, be careful with these high risk plays. You know, I did take this one. You guys know I always say on this channel, manage your risk, manage your risk, manage your risk, right? Build up your confidence. Stick to good quality companies that you believe in, right? And sometimes, right, you know, a good quality company is getting beat up. And I believe Kenvue is in that position, at least for me and my targets that I'm shooting for. So what's my plans right now with the public portfolio? Obviously, Kenvue, we're going to just see where this goes. Who knows? Maybe we'll even be able to close that out this week. Maybe most likely not this week, but next week. But on the 31st, we have our covered calls for Kraft Heinz expiring. We're going to see where this thing goes. There's really not much to say about Kraft Heinz, but that I haven't already said in other videos. But we had just about a 1.86%. Now, this is a covered call. I'm going to let this go to expiration completely because I have no problem just getting rid of those shares, get my collateral back. There's a good chunk of collateral that I have locked up with Kraft Heinz right now. So I really would like to sell that and just deploy that capital elsewhere. Guys, if you want this full trade lock, click the first link in the description of today's video. You're also going to be able to book a call with me and my team to learn more about Options Seller School. If you're looking for a Mastermind and mentorship program that is filled with good people, good quality, non-toxic human beings. You're not just a lost voice in a Discord with thousands of individuals, and you want to apply and see what it's like. Click that first link in the description of today's video just for learning more. You're going to get my full trade log. Remember, guys, sell options, collect premiums, repeat. I'll see y'all tomorrow.